All right, Griff, it's the end of Q3 2025, heading into the last quarter of the year. How are you feeling about Atlanta's office market right now?
Well, the market isn't robust, but it's not stagnant either. I mean, we're bumping along, and vacancy rates are dropping, although our occupancy level is still is still at 75%, and you want it to be healthier in the teens. So we're still about 5 or 6 points from being a really corrected and improved and robust activity market again. The lack of additional inventory under construction, plus the trickling of increased leasing activity, I think by the time we turn to the second quarter, 26 will be fine.
Yeah, so speaking of that vacancy, it is declining quarter over quarter. What do you think is really driving that decline in vacancy?
One thing that I've seen is that has exploded is the advent of spec suites. Everybody's jumping the spec suite game. And one of the inhibitors to activity is people having a little bit of this sidelines view and not wanting to sign long-term leases. You know, there's a couple of inhibitors. Construction pricing is still so high, and the expectations of all tenants now is to have nicely outfitted space for recruiting and competing in the market and draw people back into a collaborative environment. And that's not easy to do without spending a lot of money. And when you spend a lot of money, they have to amortize that over a longer term. So you've got a couple of bookends pushing each other. So many landlords have jumped in the spec office game where they're spending $80, $90 a foot, but they're okay doing a relatively short-term lease because the expectation is they can turn that space 2 or 3 times, whether it's one tenant renewing or 2 or 3 tenants over that delta of time. So that is really, really fueled activity.
Okay. And leasing activity as a whole in Atlanta's office, it was actually relatively strong in Q3. There were several major deals inked in Q3. One in particular was Ernst & Young's 102,000 square foot new lease. Now, they are moving from downtown to midtown, which means they will be vacating their downtown space. Are you seeing large tenants still right-size their footprints after COVID, or is this more, tenants shifting between submarkets for a strategic reason?
I think it's more strategic. We've been saying downsizing for the last 2 or 3 years. I think that's run its course because to the extent there's a percentage of folks and companies that are under a remote model, it tends to be on a case by case depending on the industry type. And then it may be departments, accounting and functions like that can work remotely. But against that erosion of on-site employees, if you will, they're no longer placing companies with the density they were. And so you're having more spread out amenity space. So the net reduction in square footprint is probably still dropping a little bit, but it's not as pronounced as it was.
Yeah. And with vacancy starting to decline, you think about the spec coming online, the supply coming online as well. And actually, construction is very low in Atlanta right now. There's really only one large speculative office product under construction in Atlanta. Do you think we need more office projects breaking ground soon, or is the current pipeline, appropriate for where demand stands today?
No, a lot of times they look at the markers of new construction, and if it's slow or has stalled, some see that as a negative. I don't. I see that as a market correction, and I'm frankly relieved that the construction cycle has been relatively modest because that's getting absorption and opportunity to catch up.
Sure.
So I think it's probably a pretty good thing. And, we talked back a second ago about E&Y. Yeah, yes, it's kind of sad to see the downtown market yet lose another. When you think of E&Y, you think of downtown just like you do law firms. But now law firms are no longer dependent on the courthouses, and the technology has shifted that. So you're having that exodus in downtown. Downtown and in Midtown, I wouldn't say are being saved, but they're being propped up by Georgia Tech and Georgia State. Central business districts throughout the country, usually have a downtown campus. However, we're fortunate that we have 2. And Georgia State has been the catalyst to prop up downtown. And Georgia Tech, what's going on in Midtown is absolutely insane between the student housing and all that absorption of the tech talent. So we're somewhat relieved that our resiliency in the core areas that other downtowns suffer from nationally, we're a little bit insulated from it by those two universities.
Yeah. And with the resiliency of each submarket, are you seeing that rents are still growing in each submarket? Because quarter over quarter, rents are still increasing. We're at $30.33 per square foot average asking rate for Q3. Last quarter, it was $30.22. So what's really driving the resilience and genuine rent growth in Atlanta, or is it submarket specific?
Well, it's been a funny phenomenon that when the demand was down, rates were going up, and that's antithetical to any other product in the universe. But that driver has been people wanting quality space and quality construction, and that is more tantamount than the rate per foot. So it's propped up the rates. Even though the rates have increased a little bit, it's kind of trickled a little bit. Like it's 30.2, now it's 30.33. Those anomalies could be based on more activity in one Class A building than another. So I do see that it's leveled out and leveled out in a sustainable place.
Yeah. Well, final thoughts for Atlanta's office market. Where do you see the office market heading at the end of this quarter and to next year?
Well, I see the market continuing to kind of trickle along with greater. I mean, we're 25% vacancy. I think I see us not getting back to what we call a normalized market stability at 88%. But I do see us in the next year getting that number back in the teens where it needs to be, whether that's 18%, 17%. I also see that the some of this correction can be satisfied by eliminating some product. Downtown, for example, the Peachtree Summit building. That building should probably be, just because of its obsolescence and everything else, I'd like to see that building taken to the ground, and then those government agencies can backfill other pockets in downtown Atlanta and help stabilize the occupancy in that market.